This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay guys, now let's shift back again to the gold market. On the gold market, the price action is, you could call it shy, because price just consolidating the tight range and expecting the resolving of the situation on the United States government and so on. Previously we have discussed some thoughts concerning this situation that involves in general some fundamental picture, some bit greater scale events, and I have announced some idea that I have concerning the stock market and the gold market, and by my thought that some really big flow should happen from the stock market into gold. I have discussed and explained this idea in one of our weekly researches on the I do not remember exactly whether it was dedicated to euro or gold, but in one of them. And previously I have called you to discuss this idea on the forum, but somehow our forumers weren't very interesting with this theory. Well, for me it's a bit a riddle why this idea is not very interesting, but I do not want to discuss and repeat all major points of this theory, but major thing is that in the nearest future, maybe even till the end of current year, maybe even in October, some big fall should happen on the stock market, and simultaneously the gold market also should show the decreasing. Now let's shift to the S&P and take a look what is going on here. Here's the S&P. We have discussed this possibility somewhere about 2 weeks ago, somewhere when the market was on the top, continued to form this bearish wedge. Now market has shown the breakout of this wedge to the downside, and this probably is starting to work. Why I think that stock market should fall? Because if you'll take a look at the stock market right from the starting of the 2008 upward action, that was approximately 700 points to the approximately 1,700 points. So this really a tremendous move since 2008. Whether American economy and particular each company in the United States has shown that sort of the growth of the profit, of the earnings, of the revenues, I suspect that not all of them, if you will take a look at the statement of these companies. And that's answer on this question is very simple, that this is a bit hypertrophic growth due to the huge liquidity that was inflowed in this stock market, and particularly the quantitative easing program, 85 billions per month, because since the economy on the United States hasn't taken the significant pace, and they just do not need a lot of loans, a lot of credits. The companies, the personals, individuals do not need such sort of the money, and that is the first question. The second question is that the companies, the big banks, international corporates, just a bit scared to put all the liquidity on the credit markets into the loans, and I think hardly the money that they will get from the Fed by the buyback of the treasuries, they will transfer and move to loan market. Definitely not. But where they could put it? The answer is simple: on the stock market, especially when they was here and here, because they just do not have any other assets where they could put them, only in the stock market. But now stock market is definitely overheat and overblown to the upside. This is definitely the bubble on the stock market, and this bubble should blow sooner or later. And now in the situation it looks so that it's very comfortable situation for blow of the market, blow of the bubble on the stock market. Why? Because on gold market now stand very close to its lows. So 1318, the minimum was approximately 1170. So they just need to put gold market a bit lower and move the real the paper money that they were made on the stock market in the real assets. They need the real assets. They need to transfer the fake money, the paper money, into the real money, into gold. And how they could do this? First of all, they could relieve the problems with the debt sale, and in this case the stock market, the gold market will probably fall. But they could do this even further, because I suspect that guys, I previously have said that I saw on the weekly chart of the Dow Jones, on the S&P, the big weeks with just the huge volume trading, with the decreasing of the decreasing price. I think that the major sales have started on the stock market, and the big whales really have sold most part of the portfolio that they need to sell. Because in general, how the stock market take the pace? Initially, the big companies start to buy the stocks, and when they hit market, warm market to the upside, the individuals, the small companies, come to the market and start to support this upward trend. So they, for some time, they buy together, the big companies and the individuals. But later, the big companies come out of the stock market and they continue to support just by the individuals. And individuals start to buy the equities that offer to them by the big companies. The big companies start to sell, because they can't sell the huge portfolios of the stocks just in one moment. They sell for the months, within the months. And I suspect that they now continue to sell and start to sell much earlier than even this wave have appeared. Now, how they could drop simultaneously the stock market and the gold market? Very simple, by announcing the contraction of the quantitative easing program. In this case, gold will fall because the possibility of appearing the inflation will reduce significantly, because gold market is not the market of the demand and supply in terms of the gold extraction, gold mining, and gold supply. Absolutely not, because this is very forecasted and planning data. And if you will take a look at the gold demand and supply, in fact, the gold mining is stable within the recent 10 years. That's why it is not the driving factor for the gold market. The driving factor for the market is inflation. And if they announce the contraction of the quantitative easing program, then gold market will fall, because it has started to fall when the fears of inflation was significant. But currently the fears of inflation and the probability of inflation will be reduced significantly, because quantitative easing program will start to contract. And this stock market, and you could ask them why the stock market will fall? Because there will be no additional liquidity inflow in the stock market. There will be no any money that will support this overextended growth on the gold market, or on the stock market. But the second question you could ask, that why they need to drop the stock market, are very simple. Because when they transfer, let's take a look at the monthly time frame. So let's suppose that the earn of the big companies, of the paper money on the stock market. That is their money that they put on the stock market. So they will sell and put this profit to the gold market. That money that will remain in the paper money. And if they drop the stock market, they can put the same amount of the paper money in the stock market and start this procedure again. That's why they need to drop the stock market as well, just to launch this again. That's what I think about the current situation. And why I think that there is a chance that this could happen really in October, because it's very comfortable situation with all this mess around the debt sale, with the government shut up, with the take into consideration that the Fed Reserve, the FOMC meeting will start in the 30th of October. It will be at the end of the October when we will get all the data. We will get the data for the gross domestic product, the preliminary data for the third quarter. We will get the non-farm payrolls release probably till the end of October. We will get all the data, and we will and the FOMC will get all the stuff that it will need for announcing, because hardly they will do this in the December when the market mostly inactive in December. Everybody preparing to Christmas, to the weekend. Corporates calculate their bonuses. That's not the time for active decisions, because they will not have the significant impact on the market. That's why probably this could happen in October and will continue in the next year. Well, maybe they will not announce the quantitative easing contraction purely, but they will change the rhetoric. So they will change the rhetoric. Well, they will could hint on the contraction. That will be enough. Even this will be enough for starting move to the downside. That's an idea, and guys, I call you to discuss this because this is really interesting, and that could really lead us to the huge moves on the markets. What do you think about it? Maybe we will find together some flaws in this theory, because currently I do not see them, because that's just my idea. Well, maybe if you will find something, please share with this on the forum, because this could be a really interesting topic. Well, and currently you see that gold market doesn't continue move to the upside. It just stand in the tight range, in this just wedge, and it's nothing that we could do here currently. I don't have any patterns. I do not see any tradable setups now. Well, as I said yesterday, although the pattern has been erased, this pattern has been erased, I do not still want to take the long position due to this action. Just take a look at hourly time frame. Very choppy action. It's really absolutely not the acceleration. This is a sign of the contraction of the market, choppy consolidation. That's not the continuation to the upside. And price action stands in the range of this big drop to the downside. This is more like the retracement. That's why I don't want to take the long position. It's better to wait, because the big moves on the gold market are still ahead. So let's see what market will bring us closer to the current week and closer to the 17th of October.